Hi, I'm ABC's Richard Davies, and we're talking taxes as the tax filing season is now with us. And joining me is Laura Rowley of Yahoo Finance. And I guess the first question, Laura, is free stuff. Stuff that taxpayers can use for free that will help them with filing their taxes.
That's what everybody's looking for in this season. And most taxpayers can. 70% of taxpayers earn $57,000 or less. And so if you go to irs.gov free file, that program is a partnership between the IRS and private software companies. You can find software on there that'll walk you through the process, make sure you get all of those credits and deductions that you qualify for. So
this is the equivalent to TurboTax or one of those other tax preparation software packages.
That's right. You go right to the IRS. And I think it's an important thing because the number one mistake people make on their taxes is simple addition. So it does all that for you as well.
So does it make sense to use tax software or those tax preparation packages?
Oh, absolutely. I think it makes sense not only for people who qualify for free through this program, but also for everyone else. I mean, tax software will cost you anywhere between $50 and $100. Again, what it does is ask you a series of simple questions. Do you have children? Did you, do you have a mortgage? Did you pay mortgage interest this year? And you fill out the form in sort of an intuitive way. It does the math for you. And if you have a relatively simple return, that's a very good solution.
Probably close to where you live, there's an H&R Block or some other storefront tax preparation firm. Does it make sense to walk in off the street and use them?
Well, the way I feel about those firms is if you are not computer savvy and you're utterly terrified when you sit down with a stack of forms from the IRS, that's a good place to go because there'll be someone there to hold your hand. Basically, what they're doing is filling out software the same way you would if you bought tax software. One thing you should watch out for are these refund anticipation loans.
These are when you have a refund coming, you get a cash advance.
Well, they charge you a fee for it, and if you work it on a percentage basis, it's over 100%. Imagine if you had a credit card that charged you over 100% on the purchases that you make. So the IRS has been said in December they're scrutinizing the practice of refund anticipation loans. They actually, some of the banking regulators barred some banks from participating in that business in this tax season. So the changes haven't come yet, but we're starting to see authorities say this is a really bad idea.
So if you have $500 coming back to you in a refund and you get it now, it could end up costing you, say, $250.
Well, you could end up paying the other thing. The reason they're attractive to people also is because they say, well, we'll take out the fee for doing your taxes from your refund loan. So you don't have to pay anything up front, but you're also paying a fee to get that return right away. And if you wait 10 days, you're likely to get your refund in 10 days because you're filing electronically.
So when should you hire a CPA or a tax attorney to help you prepare your taxes?
Well, this is an interesting topic, too, because there's actually over 1 million. The IRS estimates there's over 1 million people doing tax preparation, and you don't need any qualifications to do someone's taxes. So you really want to look for, and the IRS is looking into licensing this group of people. So look for a certified public accountant, a tax attorney, or somebody who is enrolled, licensed person to represent taxpayers in front of the IRS. You have to be careful. Look for recommendations from friends. Check out the person's credentials and backgrounds. But if you have a tax return that involves multiple states, perhaps an individual business, maybe somebody in your household runs a business, you have all different sources of income, then, it might help to bring a professional in at that point.
I'm Richard Davies of ABC News Radio, and we're talking with Laura Rowley of Yahoo Finance on things that can help you prepare your taxes. Now, this year, and I guess every year, Laura, there are a bunch of changes that affect taxpayers. What are some of them this year?
Well, one of the big ones from 2009, obviously, was Cash for Clunkers. I did that program myself. You can deduct your state and local excise tax and sales tax on that. A lot of people don't realize that. If you made energy efficient upgrades in your home, let's say you put in new windows and doors or a new furnace, you can deduct 30% of that cost up to $1,500. There's expanded tax credits for education. So the best thing to do is go to irs.gov. There's a whole hit on itemized deductions, and there's a whole explanation of all the things you qualify for.
And they also run into 2010, these energy tax-saving things.
Yeah, this is the year to upgrade your appliances. That's a new tax credit that it doesn't go into effect for 2009, but for 2010 taxes, if you get a new refrigerator, if you get an Energy Star certification on that appliance, there'll be a tax deduction related to that.
Mistakes. What are the 3 or 4 most common mistakes that people make when preparing their taxes?
Well, number 1 is basic math. We have a problem with innumeracy in this country, and people make addition and subtraction mistakes. If you cheat the IRS, they're going to charge you penalties and they're going to charge you interest. So you want to check over your math, and that's the reason it's a good idea to use some kind of math software. The other thing is taking deductions for which you don't qualify. You have to be very careful. A lot of people are now working out of their homes at least part of the time, but you can't take a home office deduction unless that's your primary workplace. So just go to irs.gov and be very aware of what the rules are around the different deductions.
Let's move on to IRAs, individual retirement accounts. What are these things and how do they vary?
Individual retirement accounts are a great idea if you don't have a retirement plan like a 401k through work. There's basically 2 kinds, the traditional IRA and the Roth IRA, and the difference is when you pay the taxes. So let's say you're in a high income bracket, you're looking for a tax deduction. Maybe you want to use a traditional IRA because what the government does is you put $5,000 in that account. Let's say you earned $100,000. For the government's purposes, you only earn $95,000. So it reduces the amount of income that you make and thus the amount of tax you make. The Roth IRA I actually like better because there's a lot more flexibility with it. You put money, anybody can put $5,000 in. And there's
this is post-tax dollars.
These are post-tax dollars,
yeah.
Right? So you're paying the tax right now. You put the money in, it earns interest, and then after you're 59 and a half years old, you can take the money out. But during that whole time, you can take the money that you put in, not the interest you earn on it, but the money you put into a Roth IRA can be withdrawn for any reason once it's been in there for a year or 2. But you could use it for a home down payment. You could use it if you have an illness and you're out of work. So you have more flexibility to take your own cash out.
And a final question, Laura. What about the alternative minimum tax, the AMT, which was originally designed for wealthy taxpayers but has now trickled down into the middle class?
The AMT, the wicked AMT, I actually went back and looked at the history of this. It came about in the mid-'60s, and it was targeted to 155 households who had so many different tax benefits and deductions, very, very wealthy households, that they paid almost no federal income tax. And so they created this sort of parallel tax system to say, if under the traditional tax system you pay nothing, you have to figure out what you would pay under this parallel universe, and if it's higher, you have to pay that. The problem was they never indexed the AMT to inflation. So, somebody in the 1960s who earned $100,000 was a fat cat. Somebody in 2009 who earns $100,000 is obviously above the median income, but it's not the same in terms of household income. You're not considered as wealthy. So a lot of sort of upper middle class to even middle class taxpayers are being ensnared by this tax, especially if you live in a place like New York City, New Jersey, or California that has very high state tax.
I'm Richard Davies of abcnewsradio.com, and I've been speaking with Laura Rowley of Yahoo Finance on helping us prepare our taxes in this tax filing season. You can find out more about what we're doing here at abcnewsradio.com.